Let's take a look at problem 4-5, which deals with unusual or infrequent items. If you recall from what we discussed in class, unusual or infrequent items have to be listed with your other revenues and gains or other expenses and losses. They are not reported net of taxes. If it's a discontinued item, then that has to be reported separately under discontinued operations, and that has to be reported net of taxes. So here we've been given a combined single step and retained earnings statement. They've said that the numbers are in, they've omitted 3 zeros for simplicity. We have net sales less cost of goods sold less selling, general and administrative expenses, and other expenses. This other, they're using the word net over here. We already know that's wrong. Nothing in the income statement up over here should be net. We'll take a look at that closely later. Income before taxes, and then we have your income tax and net income. Then retained earnings at the beginning of the previous period, adjustments required to correct error, retained earnings at the beginning of the period as restated, dividends on common stock, and then retained earnings at end of period. Then they've given us 4 additional facts, and they've told us to determine from these additional facts whether the presentation of the facts in the income statement and statement of retained earnings is appropriate. If the presentation is not appropriate, describe the appropriate presentation and discuss its theoretical rationale. Do not prepare a revised statement. They just want us to give an explanation, first say if it's right or wrong, and then give an explanation. So let's take a look at each of these 4 facts. The first one says, selling, general, and administrative expenses for 2017 included a charge of $8,500,000 that is unusual but infrequently occurring. If an item is unusual or infrequent, what did we start out by saying? It should not be grouped up over here. We have to list it under other expenses and losses. We don't do this net. And also another thing to take into consideration is it has to be a material amount for it to be listed separately. So here's my explanation. The item should be listed separately under other expenses and losses after the income from operations has been calculated. And this would be done only if it is material. So this 8.5 million should not be up over here. It should be listed separately. So that's included in the 66,000. The next thing they tell us is other net for 2017 included a loss on sale of equipment of $6 million. Sale of equipment is just a regular loss within a business. It's nothing that has to be listed in a separate section, nor should it be listed net of taxes. So it should be listed under, again, as in the first case, under other expenses and losses. But the mistake over here is it was listed as a net number, and that should not be the case. It should be listed before tax. Okay? The third one says, adjustments required for correction of an error was a result of a change in estimate. The useful life of certain assets was reduced to 8 years, and a catch-up adjustment was made. When we make a change in estimate, do we do that retrospectively or in the current period and prospectively? We do it in the current period and prospectively with no adjustments to the past. So this adjustment required for a correction of error, it was not an error. You changed an estimate. So this is incorrect. This should not be here at all. So for number 3, my explanation is change in estimates are not made retroactively. Therefore, the adjustment should not be made. That is incorrect what was done. Number 4, they disclose the earnings per share for the net income in the notes to the financial statement. Earnings per share should be disclosed on the face of the income statement. It should be done after the net income number. So earnings per share should be disclosed at the bottom of the income statement after net income. It shouldn't be buried in the notes to the financial statement. So that's a presentation error. So what we've seen over here is we have some items that were done incorrectly, which resulted in your net income number being incorrect or your retained earnings number being incorrect. The fourth mistake that was made doesn't result in any calculations being incorrect. However, the presentation is incorrect. So you tend to have these kind of questions asked in multiple choice questions. So you really need to have a good understanding about why we are doing whatever it is that we have gone through over here and in some other cases.